All righty. Hello, everybody. My name is Gary Dean, and I am the co-founder of TimingResearch.com. My partner is Woody Dorsey. He's been in the business for really, I think it's close to like 50 years, but he's one of the pioneers of investor sentiment and really just taking the temperature of how people are feeling about the market. And at sentiment timing, the way that we kind of work things is that we believe that human beings in the markets make mistakes, and there's methods for measuring the markets in order to take advantage of these mistakes. So, as I said, Woody's been in the business for 50 years. He's worked with some of the largest financial institutions in the world. He's been seen on all different types of TV shows, financial news shows. I've been doing this since 2003, and we merged our services together to form Sentiment Timing. And really, the way that we do our measurements of what the market is there some type of mistake going on? Is we use what we call our predictive analytics model. And the way that works is we first measure time, and Woody had a lot of it has to do with different types of cycles, and he has a lot of different tools that he does to predict when to start looking for the market to make some type of top or a bottom. So that's the first thing we look at. The second thing is we're looking for sentiment to back up the time part of it. So, for example, if we're looking for the market to make some kind of top, we're going to anticipate that sentiment. We're going to get very high sentiment readings, meaning that everybody's going to be bullish on the market. And really, the main reason for this is the majority of traders out there, they get long and they get short at the exact wrong times. And the main reason they do this is they let their emotions take over. And that's really one of the things that we preach at Sentiment Timing is you have to control your emotions, and you want to use other traders' emotions against them to get good positions. And it works really good. So knowing how people are feeling about the market it is a great way to figure out if you should be jumping on the bandwagon on the long or the short side. So Woody he's been tracking and charting investor sentiment, like I said, for over 50 years. It's a lot of hedge funds and pretty large institutions. That's one of the main things they want to see from us is where the sentiment readings are. But so once we have the time piece of it, and we're looking at sentiment that is now backing up the time for the turn, I then do the technical aspect of it. And what that's looking for is the price part, where we'll price reverse. And I start looking for divergences, either buy signals or sell signals. And I use it on all different time frames. So we get a big overall picture, and then from there, we zoom it all the way into, say, a 15-minute chart for entries. And things have worked out really, really, really well with this. And I'll show you some examples exactly how we do this. But so this is our, combining time and sentiment. As I was what I was explaining before, when we use our predictive analytics model, time is always the guide. So if Woody is projecting some kind of top, like he is in April right now, we've been bullish on this market since early March, because that was the time that we were looking for the low. And excuse me. And now we're approaching a time period where the bull friendly time period is coming to an end. So we're following the model, but now the one thing that we haven't really seen to confirm the directional change is sentiment has not really been too exaggerated to the upside. If anything, it's been pretty neutral. So there really is we haven't had sentiment confirming any kind of turn lower or making any kind of top yet. So we were anticipating, just as the most recent call that we had, we were anticipating that we were going to get some backing and filling. And the main reason was we just had a pretty massive move to the upside. So we needed to digest some. And that's pretty much what we got. But we weren't really suggesting to short the market because we're not in that time period yet. And we don't really have any sell signals, and sentiment isn't supporting it. So what we've been suggesting is that if you're not long this market right now, because we've been layering out of positions on the way up here, but if you're looking to build a position, really just let price come down to you for that last move. Don't try to chase it up here. And like I said, the main reason is we're coming to the tail end of this bull-friendly time period. So we don't have the sentiment that has confirmed the top, and we don't have technicals that have, but we have time that's now starting to get into the danger zone. So this tells us to either move to cash, ride out the remaining pieces of your long position with a stop in place, or just wait for the time to come in, sentiment and technicals, to look for the short trade. So the time, controlling your emotions, as I explained before, is knowing when the market is scheduled to reverse. It allows traders to control their emotions, and it's something that we've been really pounding the table on, because if you're able to control your emotions by knowing, okay, the market's going to make a rally from the October 2022, which is an example I'm going to show you. You're seeing sentiment that's at zero bullish sentiment readings, where everybody is bearish on the market, and we're approaching support levels. That's when you want to be looking to buy. So if you're able to control your emotions and not panic sell at the lows and then chase at the tops, you're allowed to sit back and make these trades, put stops in place underneath it, and go do what you want. You don't have to sit in front of the computer. You don't have to do anything. We have, our analytics model pretty much gives us exactly when to be starting to look for stuff. So the time piece of it, Woody has 30 different market timing indicators that he uses to predict exactly when the S&P is going to make some type of a trend reversal. And it's sometimes it's weeks and sometimes months in advance, where our subscribers know, 6 to 8 weeks in advance when to expect the next top or bottom. So this is one of the examples, and I'll go into my regular charts as well just to do it, but I wanted to just give you a pretty good rundown as far as what we do. So this is our July 28th, 2022 newsletter. And this went out to our, premium subscribers. So we had 93% bullish sentiment readings. And what we were looking for was there's going to be another sharp drop near a mid-August high, and that it's going to last until October. So in July, we were looking for a top in mid-August and a low in October. So if we take a look at things here, this was our where are we here? This is 2022. Okay, so here's your August top right here. Here's your October low. So you can see the way that these, the way it played out on it, where we had the exact top move on this. We had sell signals in place. And then from there, we just wrote it down to where we had 0% bullish sentiment readings. And from there, we had a spike up, and then we had a big drop. And this was, really the confirmation when we had a big move up, we had a drop, and then went down to 2% bullish. So everybody was, what it basically tells us when we read between the lines of using sentiment, is that nobody was really believing this was the low here, because every time we had the quick drop, everybody was turning bearish, and that allowed for a pretty nice move where the S&P rallied some 500 points. So this is just an example of how we do, work this. But now this is going into our November 3rd, 2022. And what we're, like I was showing you, where this was the important low. And then in October, we were saying that it's going to lead to an early 23 recovery high and stops. So if we go and we keep looking at how things went on that, hang on one second. Okay, so here's the when we were rallying, here's the October low, and from that, hang on one second, I have on screen here. Okay. Okay, here we go. So this is this is our regular my regular charts that we go over. So this was the October low here, and we made the top in early 2023. So this was the timing model, and then from there we had to move down, and we were really looking for some type of low to come in March. And when we take a look at on the daily chart, is that this is where the technical piece comes in, where we're making this move. We had a 2% bullish sentiment reading. We were looking for the low to come in, and then from there, if you look at the daily chart, we had bullish divergences. So what bullish divergences are basically when your momentum indicators are making higher lows as price is making lower lows. So we had we were at support. We are seeing a bullish divergence on the daily chart. And again, everybody was bearish on this market because they're, like I said, a majority of the people will end up on the wrong side of the trade. It's just really the way things work. And these cycles, they repeat month in and month out. And it's crazy how it is, but you'll see once everybody starts getting extremely bullish on this market, it typically means that we're nearing some type of top. So let me get back to my my charts here. So as I said, so we made, we had some great calls on this part of it. And as I was showing you where, this, if you're going to imagine the way, say, institutions trade or your professional traders, what they do is when we have this type of move like this, where there's euphoria in the market, you're seeing 98% bullish sentiment readings and stuff like that. They're shorting the market up here. And then what happens when it starts coming down, and now you have denial, fear, desperation. And once we start getting into the panic end of it, they start closing their short positions, wait for the capitulation, and they start buying down here. And like I said, these cycles will repeat month in and month out. Sometimes they may last a couple of months, but that's all the timing piece of it that we that we like to move off of. So sentiment will always take place at extreme sentiment readings will always take place at tops and bottoms, meaning that there's you're going to see these extremes at the tops, meaning that if we're seeing new highs in the stock market, or say the S&P 500, you're not going to see 0% bullish sentiment readings. You're going to see 99% bullish sentiment readings. And these extremes, and then when the market's dropping, you're going to see 0% bullish sentiment readings. So the extreme ones are always going to take place at your tops and bottoms. Now, there's going to be a series of sentiment readings that are not extremes. You just kind of ignore them, just keep an eye on how they do it. And this is really what Woody does with his with the sentiment and how he charts it. Right now, we just kind of put the numbers out, what it came in. But you can see where when we are at this top here, everybody's getting bullish on this market right here. And then if we go and take a look here, everybody's getting bearish as the market is going down. And it's always that way. When we're at tops, they're high. When we're at lows, everyone's bearish on the market. And that's really where we're able to take advantage of it, because it's like seeing the future. And once you're entering into a time period that you're looking for a reversal to the upside, everybody's bearish on this market. Really, the next thing you do is just find out what pivots do you want to start buying, and you don't listen to the talking heads, because pretty much they panic all the time, and they're just jumping on whatever trend is in place. So to go to the October low, I want to just show you how I did to figure out where we were going to make this low. And I like doing Fibonacci retracement levels. So if we look at it, we're just taking it. This is when we had that big the COVID scare. And so this was my low, and I made this the top. And once we made this top and we came down, notice we landed right at the 50% retracement. So we're at a 50% retracement on the weekly chart. We had bullish divergences. And if you remember, on the daily chart, we had bullish divergences in place. So we had everything that was in place for a low. We had the support, we had buy signals on the daily chart, we had buy signals on the weekly chart. So we just took our positions. It was one of the easiest trades we ever made, because we basically we got long right at these lows here and started covering some of them, but it was like almost 500 points to the upside. So it was a fairly simple trade. And that's another thing that I want to kind of go over here is, so these are, say, the bigger picture moves when I'm showing you the weekly and the daily moves. So here you can see that the weekly, we actually we're setting up some sell signals here, especially if we take out these highs. And remember what I was saying, where we're actually anticipating that we are going to see some type of top in April. So how long is it going to last? We're thinking it could last some time into the summer. And the way that would set up is, everybody would have to be extremely bullish on this market. Excuse me. And that's one of the reasons why I didn't believe this was the top, because we were seeing 75% bullish sentiment readings, 68, 80, nothing. There was zero extremes, even after we're trading up at these levels. So I was anticipating that we were going to get some type of pullback, because we'd had some sell signals up here on the 60-minute charts. So I look at where we are, the bigger picture on the weekly, then zoom in on the daily, and then from there we start using really specific targets for entries and exits on the 60-minute charts. So this is a pattern that when I like using identifying patterns and then laying them out for all of my people and watch them play out. And this was one where, when we had this is the banking crisis right here, I put this actually in place. I said, this may play out like this, where it's an inverted head and shoulders, where here's your left shoulder, here's your head bounced up. And I said, this is where we're going to have a pullback. It's going to be a nail biter to trap all the bears on this. And it's exactly what happened. And the target on this is actually coming somewhere around the 4,300. It doesn't mean that it has to be hit there, but you can see once we got into this support area, this is, buyers stepped in. I think a lot of people are shorting because they don't really believe that that the market could go higher with this banking crisis. And I think they're going to end up being right, but they're going to be right when they're covering at the highs and then switching to the bullish side. And then we'll probably have another round of the banking crisis, because the news always seems to follow where sentiment is, where timing is, and what the technicals are telling us. And then if we're looking for some type of low or high, I mean, I've been asked the question 1,000 times, like, what's going to be the catalyst? And I was like, I don't know, but we'll find out soon enough. And I mean, it's as sure as the sun's going to rise tomorrow, something happens and we either make some kind of low or top on it. And it really is amazing how they follow it. But so right now, like I said, we're in the camp that we're going to take these highs out. I believe that we're coming up and going to test the 4,200 level. I think that there's going to be a lot of sellers that are going to be waiting there. I think that they're going to really try to hold this line, and we'll probably get some kind of quick pullback. But from there, I think they're going to take this out, and that will be the next round of short coverings. And as I said, the target for this inverted head and shoulders pattern is all the way up to 43. But if you take a look here, look at the open gaps that we have. We have one at 42, and then we have one up at 48.
Gary?
Yeah.
Are you trying to show a chart? We're still seeing the slide.
Oh, you are?
Yeah.
I'm showing. Yeah, no, I'm showing my chart. Hang on.
You have to.
Oh, I thought if I just switched it. I'm sorry. hang on a
Yeah,
second.
you have to share the whole monitor if you want to switch back and forth like that. I think you
Yeah.
might just shared the specific window.
Do I? Okay, so just do a new share. Okay, sorry about that. Yeah, I was I was showing you the charts. So okay, so can you see them now?
Uh, okay, yes,
Okay.
SPX chart. Yeah.
All right. Sorry about that. I thought that once I moved the screen, it was going to be moving over. But so now if I wanted to switch back to the other screen, just hit new share and switch it back.
Yeah. Yeah.
Okay. All right. So I'm sorry. I'm going to go. I'm going to go back on this one and show you. So what I was telling you, what real quick, was that when we made these lows here, and then we were anticipating the top in mid-August, which we got. And when we were coming down here and we were looking for that October low, what I did is I put the Fibonacci retracement levels here, and this was the 50% retracement was exactly where price came to. We were buying this entire move down. Here are the buy signals on it. We had 1% bullish sentiment readings. We had consecutive 1%. But you can see when we're up here, we had extreme bullish 99 and 98%. So this is what I was showing you before, where everybody gets extremely bullish at the tops and extremely bearish at the bottoms. And if you look here, so these are your two extreme bullish sentiment readings. The S&P is making a higher high, and notice the technicals here are making lower lows or lower highs. So we had a sell signal on the weekly chart, and it came in right exactly when we were looking at it. And then when we looked at the daily chart, we were seeing the same exact thing with the the sell signals in place. So this is how we basically we take the time aspect of it. From there we then look for the extreme bullish sentiment readings and then technicals to back it up, and that's our predictive analytics model on things where we haven't really had a losing trade in quite some time, and we've been doing really well. And the way we trade ours is we use the S&P 500, but we trade SSO and SDS. So they're just ETFs that follow. So SSO is it goes at 2 times the S&P, or to say the spider. So if the spiders moves up 2%, that's going to move up 4%, and the SDS is the inverse. So basically, when the S&P goes down, SDS goes up. So those are the instruments that we use to make these trades, and it's been working pretty good. But as I said, I start off on the weekly charts, then go to the daily, and then we start going in, because even though we were looking for this time period, the low, to come into the April, there's going to be a lot of ups and down moves. So I look at the 60-minute chart, and so we were looking to buy, then we were shorting when we had the extreme move. But once we got back down to the levels that we were at extreme, where we're seeing extreme bearish sentiment, where we were switching back to the long side on it. And this is really how it works with it, where we're able to use a shorter time period to be able to pinpoint exactly where the squiggles are going to be. And as I said, we've been long from here, but the way that I kind of build our positions is we take a third at a time. And then as we start going up and we're in profits, take a third off, maybe buy it back, or you take a third off and leave it. So you're scaling out of your position, just like I was showing you, how do professionals do it? They don't hang on to their a full position all the time. They're building it, and then once the move starts going in their direction, they start scaling out of it. And then once they scale out of it, they start looking for a reversal in the other way. And it, like I said, it happens month in and month out. So what I was, our expectations right now are that we're looking for these highs to be taken out right now. And if they do, there should be a magnetic pull right up to the 4,200. As I said, there's going to be a lot of sellers that are going to be waiting up the 4,200 level. But kind of what I believe is going to happen is we will get a little bit of a nail biter down. It will be real quick, maybe a day or two. And then they're going to take this out. And all the people that are shorting or selling up here are going to be the next round of short squeezes. And we'll probably see a test of that 4,300, because the inverted head and shoulders pattern here, that's actually upside target, is the 4,300. So it's no guarantee that it's going to get there. But if you notice, we are looking for some backing and filling, made it right down to the 50-day moving average on the hourly chart. Buyer stepped in, and now we're going to see what happens. I don't know if this is the actual low or not. Maybe we need to come down a little bit more, but this is going to be the important one, right? If the bulls can get past these highs, they're going to it's going to be a testing this 4,200 in pretty short order. And for the bears, I mean, for them really to, let's say, get control of the direction, they're going to have to take out the 3,900 level. I think everything else, people will continue to buy dips. This is where you'll get panic coming in, and people will start selling, even though there's support here. But as I said, I don't really see that coming just yet, because of we don't really have the sentiment readings that are marking a really good top. And it doesn't mean that a top can't come without an extreme sentiment. It happens very, very often. So, and we don't really have any sell signals in place. So I'm still on the side that we have some more room on the upside. So let me just go back to our screen here. Okay, so as I said, the sentiment, you're always going to get people that are going to be getting extremely bullish and bearish at the wrong times. With the technicals, divergences, they're used to identify potential trend reversals. A bullish divergence is when when indicators, momentum indicators, are making higher lows as price is making lower lows. That's your bullish divergence. Bearish is the exact opposite. So larger reversals, I tend to watch the 60-minute chart, because it's you can do it off 15-minute charts, but it's just not you're going to get whipsawed in and out. And we don't really look to to be kind of day traders or anything. We look for the swing trades and try to scale in and out of them. And it's like I said, it's worked out pretty well. I can't remember the last time that we've had a losing trade. We've had a couple break evens because we are already in the money, and we had our stop at even. And the most recent one was the banking crisis that came in. But in any case, it was just a break even trade, and that's after taking some pretty good profits on the other ones. So is there any questions that anybody has right now for me? I mean, these are, I can show you guys any charts or any, whatever you feel like, what do you need to look at? And the only thing, David, I'm not sure how to notice where questions are if somebody does ask one.
Oh, do you see the Zoom window or the Zoom menu?
Yeah.
There should be a chat button in there.
Okay.
It might be under more.
Okay, so I think okay.
Should open a little window.
Okay, so I'm getting some. I see them right here. So the way that they measure the investor sentiment, Woody has what he calls listening posts. So they consist of let's say financial advisors, money managers. So they actually go into his software and will say how the majority of their clients are feeling. So you have some the professionals that are then they're let's say that their clients are financial advisors or hedge funds. They're each one of these people that are calling in they have a different set of people that they're saying how bullish or bearish they are. So they'll give a number from 1 to 100, and 100 obviously is the most bullish, but Woody charts all that, and it's every day they go in and he does it. So he has a longer term investor sentiment as well as a shorter term. But this is all it's proprietary kind of software that he developed a while ago. So it works pretty good. Okay, so gold and silver, I can pull up the charts on it. I basically just really stick with the the S&P 500, but it's very easy for me to do this on it. So this is just looking at gold GLD, which is the gold touch on it. So this is on an hourly chart. So if I was just looking at this and somebody was telling me, they're either looking to get long or short gold, I would say wait for gold to come down. And my guess is it's probably going to come and test the. Let's see where I am. Sorry about that. So I believe, Jesus, sorry. I believe it's going to come down and probably test the 50-day moving average right around that the 180 level. So I wouldn't be chasing it up here. This is your support right at the 185.58, but you can see that momentum is starting to slide on it, and it's made an awesome move. So there's a lot of gaps underneath here. So I would be a little cautious. That would probably be the best way that I can do it. Silver, I mean, they pretty much. Oh, I'm sorry. A second. Here, that's the. It's really the same thing. This looks like it's actually could go higher before lower, because if you come down and look at the momentum right here, there is no sell signals. So this actually looks a little bit better than gold. And again, if it gives you a chance down at this, this is some major support right here that you can see anywhere from. Oh, hang on a second. So this area right here is really major support, and that's right around that 2230. So I think if you get a chance, building a position somewhere in this area down to this 2233, I think it would work out pretty good. And then, if we get a move up after that, let me take a look and see what some targets would be. Yeah, you're probably looking at the next resistance is up at 24 and then going up to 2490. So huge. Take a look at that. Again, we had sell signals, so this top right here made sense. And it's very similar to with the S&P, where it had a fantastic move right here, and we were anticipating some backing and filling. The support held. This is this was the support for the Qs. It would be anywhere from this where it made the low, all the way down to you can look at the 309.25 level, 309.50. And then really you have the 200-day moving average up at the 307.08. But I would still probably, I think that right now we could come up and test these highs, but I think expecting a move down to the 315.62 would make sense. And if it holds, buy there, because we'll probably be taking out those highs. And this will be, the Qs will pretty much make that top the same time that we're anticipating the top to come for the S&P. So they're also on a little bit of borrowed time. No, we don't. It has nothing to do with any of that stuff. This is Woody's. This is his proprietary sentiment data. And look, I have a feeling a lot of them do follow us to get it. But he's one of the few in the world that actually that tracks investor sentiment the way he does with it, where it's there. But no, it has not. I've never really understood that whole fear and greed the thing, or the AAII. I mean, I've looked at them. That was pretty much before I was working with Woody. But once I started seeing his sentiment compared to the other ones and everything there, it was like night and day, because you don't, a lot of them, like especially like the fear and greed and that stuff, they only came out weekly. So by the time the move came, it was a little bit past what you could have done. But knowing where sentiment is pretty much on a daily basis, which I go back and forth with Woody, gives us a lot easier thing. So let me pull up Tesla real quick. Tesla looks actually pretty interesting here, because here you can see we have some bullish divergences. And if we're just going to pull out some support lines, we're probably looking pretty close to where it was. So right in this the 176.68 down to this 176, and if they lose that, then we're looking at a move coming down to the 164. But this is really your I would say your buy zone would be right in here. The bulls are obviously going to have to get it through this get it above, say, 191. If they do that, that's when I believe that you'll see some type of short squeeze right back up to the 207. But I don't mind. Tesla does not look that bad at all right now. I actually like that a lot. So any other questions? We do. I will. I'll put it out here in a second. I have to just pull up the what the coupon code is. I'll put it. So what I'll actually, let me just do this. Hang on one second. So and I'm gonna hang on one second. So I'll put the stuff right in here, so then you can just see it. So here's our website, and then if you for the actual coupon code is free month. Let me just double check that though, make sure. Yeah, free month. So that's how you get you get a free month on that one. You can check and see how it goes. And like I said, it's an interesting it's an interesting way to measure the markets. I've never been as confident as I am right now with my trade, with our trades, because it's a very relaxing way to do this, meaning that I love to golf, I love to be outside, and once we're in a position, I don't really have to do anything. We just kind of just set our stuff. We look for upside targets, scale out of it, and then just move. Yeah, that's the chart that was that I had up there. Is there another chart that you wanted me to pull up? Okay. So yeah, so Tesla, this is I kind of don't mind this Tesla on that. Another one that's actually interesting that I like to watch is the VIX, and this is actually it's fitting our profile for some type of top to come in April, because if you notice that, like the where this is on a range, we're at the lower end of things right here. So there's not a whole lot of room for the S&P to go down before we start going into the levels when the Fed was just giving money away. Yes, that is it. Oh, I'm sorry. Yeah, the coupon. So when you just, that's it. And then just put in free month. So this is, there's not a whole lot of room down here for the VIX to go. And, as you know, when the VIX goes up, the stock market's going down. And another thing that is pretty ominous here is these bullish divergences that are forming on the VIX. So it's like I said, something I've been telling our members is that if you're, because we've had a big big push last week with a lot of new subscribers, and a lot of them were asking me when to get long, and what I told them, I said, right now, the bullish, the bull friendly time period is, it's running, it's on its last, few innings here. So I said, the easiest trade right now is just to relax. And then within the next week, 2-3 weeks, we're going to start seeing sell signals, and we're going to be shorting, and that's going to be a bigger move than we just did on the upside, where I wouldn't be surprised at all so what I'm like, when we actually make the top, I'm thinking that we're going to come down and probably test the 3650 lows here, and I'm not even ruling out coming down and testing the 3500. So the bigger move from where we are right now is going to be to the downside, but I still think that we could be testing the 4300 before everything is said and done. So, and like I said, I like to just make the trades, and then once you have, you like a lot of profit on it, all you do is just put, like, we got long the S&P 500. Our average entry was right around the 3940. So we have a ton of wiggle room on it. And being, I still believe we're heading higher. It's our final third that we have. And I'm just telling them, I'm like, you can just lock in gains, or you can, just put a stop at entry. And if we see 4,200, take a little bit off. If we see 4,300, move to cash, and we start looking, to short this market. And that's it. And just don't overthink things. And that's one of the biggest problems that, a lot of people do, is they're, one of the issues that Woody and I both have been talking about for quite some time is, everybody's fixated on, like, calling the big picture, meaning they're looking at the I'll fix that for you in 1 second. So one of the biggest problems that's going on right now is that you have it, and I've never really seen the market this split, where you have half the people that are calling for a new bull market to start, and then you have half the people that are saying that it's the new market. We have a new bear market that is going to be starting, any day. So it's one of those things that it's crazy, because it's everyone's looking at the big picture, on calling the new bull or bear market, but they've really gone nowhere, going all the way back to, you're talking a long time, where they've seen big moves going up and down, but we haven't gone anywhere. There's been no big upside breakouts or downside. So when you're able to take advantage of these big moves up and down, that's where, like I said, we're up, probably 40-50% right now, and we're only in April, and that's because we're able to trade both sides, and these are swing trades that are decent moves with it. Maybe half and half means the year is going to be, it very well could be. There's no, that's the thing, is that what I try to shoot for when I put out our trade alerts, I won't take a trade unless I see that we're going to make a bare minimum of 100 points on the S&P 500. So if it's just something, these little moves like this, no, we're looking for something that we're going to be able to hold on to for a week, 2 weeks, 3 weeks, maybe even a month. And then from there, you start moving it, and it's the same thing that happens. And we're really, like I said, we're focused on, anywhere from 2 to 6 weeks, even though we have a bigger picture view of things, but it's like, how do you make money with it? If, if we know these are actually the lows, and, you're buying the dips, but then come, in August, we're coming down and testing these lows, you just wasted an entire year when you could have made huge gains. But I mean, I agree. It could be, it's a battle going on, and I mean, as far as making sense, who makes the most sense, which it's a very, very dangerous thing to do, is try to make sense of this market, because drive yourself insane. But one of the, I mean, if you're just looking at who should be right, I mean, I'd be all over the Bears and saying, yeah, no doubt, they're going to win 100%. We have, inflation that's still high. The economy is going to go into a recession most likely. We have, the bank contagion. But that's also when everybody shorts the market, and then they're used as, fuel to spike the market higher. And, if you notice these moves that, when we get those big spikes, they're usually the ending move, because this is all your bears that are covering. And then that's when we're able to do it. Repeat the call. Well, what did it, okay, so hang on one second, let me just do this. So on the S&P, what we're looking for is there's going to be some type of top that's coming in April. So let's see. Okay, so there's some type of top that's coming in April. I personally, I mean, I'm not married to this, because we've made some fantastic gains, and I do know that we are, we're at the tail end of this move. But right here, if the bulls can get above the 41.31, which I do believe they are, because buyers stepped in right where they should have. Once they do that, we're going to get a quick move that's going to go up and probably test this 4,200 up here. I believe then we come back down and test the 41.50, 41.30 before coming up and taking that out. And then once the 4,200 is taken out, that's where I believe we come up to the 4,300. Now, again, I'm just putting out targets that would make sense just because of patterns. There is no, guarantee that any of these things are gonna happen, but it's something that we keep an eye on. And these upside and downside targets have worked out pretty good for us. But is that it? And so it is a buy. Like, I'm thinking the S&P, I would not be shorting it right now. But as I said, the bull friendly time period is it's approaching very quickly. So it's not as safe as it was buying down here. We're getting into that time period that makes it a little risky. So that's why I can't sit there and say definitely buy right now, because we're going up to 4,200 or 4,300. We're in times right now where you're going to start seeing big moves in both directions, and that's usually the sign that the end is near. And one of the things that I like to look at also, it is another one of my little tricks, is when we're making some type of low or high, what you often see is the indexes splitting from each other, meaning that you'll see the NASDAQ very green and the Dow red, or the NASDAQ red and the Dow green. Whenever you see that kind of happening, it just means that the cylinders are not all running together, and it's it usually means there's a top or a bottom coming in real soon. And we started seeing it. We're starting to see the Dow and the NASDAQ kind of diverge from each other now. But I think that, like I said, what makes my preferred pattern is we're coming up and testing the 4,200, possibly even the 4,300. So that's sentiment. You know what I'm saying? It's crazy, but everybody, they panic at the exact lows, and they get extremely, everybody knows everything about the stock market when we're making, when we're at that top. And it's to me, it's like I said, it's silly. I would rather turn around and make 20 trades and make 150 points on the S&P and not have to worry, And, whether I'm right or wrong on a new bull or bear market, there's certain stocks that people could buy, but to me, this is just the easiest way really to make money. But no, you're right. There, when people start freaking out, that's typically when a low is approaching very, very fast. So does anybody else have any other questions for me? Well, David, I'm actually going to leave mine a little bit short if there's no more questions, if that's all right. I don't really have a whole lot to go over. Let me actually what I can show. Give me 1 second. Okay. So okay, so as what I was saying, the actual what we have, that free month, that coupon that David just put out there. What do we also, once if you become a paying a member, which hopefully you guys all will, one of the things that we do is we have a 100-point guarantee, meaning that if we don't produce 100 S&P points in 3 months, you get your money back, no questions asked. We have not had to refund anybody yet. So we were pretty confident with this call that we make it. But so if somebody didn't want to do a 30-day trial and wanted to just go right in, this is the coupon code on it. If you don't, 3 months, if we don't make it, we get do it. But well, we don't see this is the thing, SC, is that the daily, there is sentiment readings every day, but we don't put them out every day just for the main reason. If some of them are just, they're nothing, you know what I mean? You're just putting a number out. Like if you get a sentiment reading of 52%, what does anybody do with it? If you get a sentiment reading of 68 or 24, it's what we really look for are those extreme levels. So that's what we really monitor with these is when you start seeing a 90% or a 1%. So they don't come around all the time, but you can see they do come. And when they're there, you have big, huge swings. So we do measure them every single day. We just don't put them out to the members every day because it would just be too overwhelming. Like they'll be like, I don't know what this means. And typically when Woody puts it out, he'll explain, listen, this is too many people are getting bullish up here, be careful. So we put out like email alerts for that. But like I said, there's a lot of data in the sentiment that is just useless and confusing. And that's the reason why we really just look for these big things that are going to produce swing trades and 100 points or 2 or 3 or 4, 500 points on the S&P 500. So, well, no, when we do the sentiment, it is just for this part of it. It's for the S&P 500. That's what we share. But he can do it. He does it for sometimes for like Bitcoin or gold. But for what our service that we do right now, we really just focus on the S&P 500. And one of the things that I explain to people is that a rising tide is going to take all ships, and the same with a falling tide. So when you're in the right direction of the stock market, if you find any decent stock or you don't want to trade the SSO or SDS, if you just find a stock that's good, and there's a lot of services out there that do that pick out particular stocks. We were doing it. I was doing it when I had my other newsletter, but it was just overwhelming tracking everything. And, when somebody new came in, so this is simplified things for me, but yeah, so typically the sentiment numbers though that we put out are just for the S&P 500. Let's see if I missed anything. All righty, so I think that's it, David. If you want to pass this on to your next host, and I appreciate you guys staying and listening to me. And like I said, if you have any questions about anything, here's my email. I'll put it in here. as well. I'll be more than happy to answer anything for you guys. So send it to me on that, and thank you for letting me participate in